Hello everyone, this is the episode 2 of our this section. In this section, we will discuss about the index trading. Index trading, when you are do for the intraday, it's a little bit risky, but you can understand that why this index trading, because index has the highest number of volatility. You can see that the bank nifty and the nifty has the higher volatility. So wherever you are getting the higher volatility, there is a chances of high movement means upside or downside anywhere. So just we have to check some simple technique, that if you are trying to make some good handsome money, then this type of technique is useful for you. But the thing is that if you are just a newbie or you was not experienced in the day trading techniques on the price action, most probably, so it would not be helpful for you. So the thing is that so for all these things we have to prepare one setups. So the setups is like this. This one is 10 moving average, this one is 50 moving average, and this one is 100 moving average. This is a 15-minute charts of Nifty 50. So what we will do, we will use the only two indicators. First one is the 10 moving average and second one is the my MACD. So MACD setting is 12, 26 and 9. This is its default setting. Okay, so now what we will see, first of all we will check the chart, that in the daily chart where it is actually lying, means is there a nearby any support, or if it is getting any resistance or something, or what is the condition that in the last 3-4 days if it is the direction was downwards or upwards. This we will check for our just general overview. Also we will look after the FII and DII activity before the day before the trading in the EOD basis. So we will understand what is the condition of the market. After that, whenever we are trading, we have to prepare a 15-minute chart, and we just have to wait for the correct signal or the correct pattern that we will use. First thing, you can go for the buy position whenever your price is running above this 10 moving average, but you cannot take entry if it is far away from the 10 moving average. Suppose this is the opening of the last trading day, so you can see this is my 10 moving average and it started so far. So in this scenario you cannot take any positions. Okay, so you have to check the crossover when the price is crossing the 10 moving average from downward direction to upward direction or upward direction to downward direction. So whenever it's near to this line, you have to be very much alert that the price may go either side, so you can take your positions accordingly. So I just randomly check some previous data, that how it will work. Okay, so see, there is two things. First we will check its moving average, and second we will check the MACD crossover. Okay, see, in this level the price is just near to the 10 moving average. Initially it was in the downside of 10 moving average, now it's come up, but you can see the 50 moving average is here and it is tested over here. Previously also it is tested over here, so it start moving, go downwards. So at this point, at this level, you can see the MACD is also about to cross. Okay, see, MACD is also about to cross. So cross in which direction? In the downward direction, and it is just lying on the 10 moving average. So we have to be alert that there may be a chance or position we will get that it will go downward side. In the next candle you can see that it's a big red candle, and you can see the divergence also there, that and you get the confirmation that your price is going down. So at that position, as this position, you have to sort this one. Okay, and you can see within the 1 hour the price goes down along. Second position where we are getting, yes, see, here also we are getting the same way. The price is just cut, and in the 10 moving average, and this for this position you can make a short position, so you can short and you can get the profit up to here. This is not a lot of profit, but it is 670, I think 10,670 to you can get 633. Okay, again see over here, the price has crossed here. Yes, the MACD crossover is there, and my 10 moving average price also not so far from the 10 moving average, so we can prepare a buy position over here. But here is a 100 moving average is there, so it will act as a resistance for this. So if it is reach up to here, you just have to come out from your positions, because there is a very less chance that it will cross. There is a very less chance that it will cross and go up. So in this condition you have to comfortable with the short profit. So this is the thing, is that in a day you will get so many times this type of chances. Again you see that price in the open like this, on that time the moving average was so far from your current price. After this is consolidated, and here it just stopped, and you can see the MACD crossovers is going to happen. So on that time, if you just sort over here or here, you will at least get up to profit up to here, because this is 50 moving average, so it may not break, but on this time it was broken. Okay, so this is the simple technique. In everywhere you can check in the previous data, everywhere you will get the opportunity. So you just have to look for the signal, proper signal. So you can see that there is a lot of conditions that like this. These are the simple two lines are moving together. On this condition it will not work, or you will not get any proper confirmation that whether you can enter or not. So now for the positioning, I am saying that how to make your positions. Like if it is 10,600 or 10,500, so taking position with the full lot, it's not possible for the small retail investor or little trader. So in this case, what you can do, we can do one thing. Suppose if it is I just considering this one as a just for confirmation that how we will take. Okay, so suppose this one is this is 509. So if I am planning that I will go for the long position over here, so I can do one thing. I can just go for the long position with 10,500 call options. So the thing is that when the price is running over here, so I have to take the call option. I have to go for the long on the call option with the underlying price, and definitely it should be in the ITM, in the money, not for the out of the money. If you are go with the out of the money, there is some chances that it will not move that much. So always go for the in the money. Same for the, if it is going the downward direction, you can buy the PE also. Suppose this is around 10,480. So 10,450 P is the best choice. If you check the 10,450 P, you can see the similar type of graphs also over there, so that would be easier to take decisions. And I think this is a good technique, and you can check with the previous data in the paper trading, so you can understand that what is the accuracy you required. I think you will easily get 80% accuracy in this technique.